annually for the foreseeable future. Paul Christopher is head of global market strategy at the Wells Fargo Investment Institute, and he joins us now. Paul, thanks a lot for joining us. It sounds like you are not, your view on the space has not fundamentally changed from the big event that worried investors so much earlier this week, and that was the emergence of DeepSeek.
Yeah, that's right. I mean, DeepSeek, give it credit. There's some real innovation there in terms of teaching the machine to do inference. But there were already some concerns in the marketplace about the amount of capital being expended on hardware as opposed to software. And so those concerns seem to be confirmed by DeepSeek. Now, having said that, if DeepSeek really is that efficient, then you'll see a lot of other small companies adopt it because it's cheaper, and then you'll see a lot of other demand for computing power. So we still like the idea of computing power, and we do think there will be a lot of investment this year, capital expenditure in the chip space, but eventually you'll start to see more expenditure in the software, and they've actually done a little bit better lately too, especially this week.
What do you think of the comments from ASML this morning? They I think, are largely perhaps responsible for the for the positive sentiment we see in the tech stocks this morning. Christophe Fouquet saying anyone that lowers cost is good news for ASML, and he's talking about artificial intelligence costs. Lower cost means AI can be used in more applications, and more applications means more chips. What do you think of those comments?
Yeah, precisely. It's a better way to say what I just said a couple of minutes ago, which is that if DeepSeek or anybody can do this more efficiently, and in a market you should expect that, then you'll see more and more companies being able to afford that kind of computing power and therefore demand it. And so ASML is gonna see demand for more chip making machines going forward, and we would expect, as I said earlier, more demand for computing power.
Okay, let's move on to other sectors of the U.S. economy. You and your colleagues like, among other sectors, the industrials. Why so?
Yeah, for a couple of reasons. Number one, we think the economy is going to be very solid here in the U.S. this year, and we think industrials represent an attractively priced way to play that growth, that continuing solid growth in the U.S. economy. Number two, if you think about AI again, and not to dwell too much here, but what does AI need? It needs power and it needs data, and you can bring both of those together in those data centers, which is going to mean a lot of construction. And a third reason might be that we like industrials for the potential for reshoring, and that's a big priority for the new Trump administration or the new old Trump administration. And we do think there will be some of that going on, and so we would like to be well positioned for that going forward, especially for a long-term investor.
Our first guest of the morning, he talked briefly about the U.S. industrials as well. He thinks a big factor at play here is the fiscal spend of the new Trump administration and Congress. Are your thoughts there?
I mean, there's already some built into the budget insofar as we have laws that were passed during the Biden administration that require building of infrastructure and renewable energy, and some of that will continue, but our focus is mainly on what we expect to be a big driver going forward. Again, thinking about a long-term investor, which would be AI, data centers, and eventually reshoring of some U.S. businesses from overseas.
Another sector you like is communication services. That would be the big telcos in the U.S. Like AT&T and T-Mobile, which have both, I think, impressed investors with their most recent sets of results. That sector in Canada, and they're very, very different for a lot of regulatory and market reasons. That sector in Canada, the telco sector, very much beaten down right now. Why do you like the U.S. communication services sector?
We think that comm services, first of all, looks attractive to us, more so than information technology has looked. Those multiples on some of those hardware companies and the Mag 7, as we like to call them, those look a little bit pricey to us. But comm services, we think, will be a play in continuing to develop the internet, 5G across the United States. That was a goal of the Biden administration. We think that continues, and we think comm services will play into the AI trend eventually as well. And so combining that long-term prospect with interesting looking valuations puts us in a favorable position on those companies.
Okay, why don't we finish with the U.S. financials, another sector you and your colleagues like?
Yeah, again, think about the recovery, the stronger U.S. economy than expected. And we're starting to see longer-term yields rise, and the Fed has managed to lower shorter-term yields a little bit. So that means a re-steepening of the interest rate curve, where the shorter end, the shorter term goes a little bit lower, the longer end goes higher. We think 450 to 5 on the U.S. 10-year Treasury is a reasonable range for year-end. That should help the banks going forward.
Paul Christopher, thank you very much for your insight. He's head of global market strategy at the Wells